traders, Raghee here, and in tonight's TradeForexFutures.com free video, we're going to talk about the dollar again. So if you got yesterday's video and you didn't watch it, you missed really a great lead up into the sell-off today. So this video is going to be following up on yesterday's dollar index conversation, which is a pretty significant one, especially considering my long position in the Euro US. So let's talk about the dollar, Euro US, and I'm also going to talk a little bit about my current position in gold and how you can still take a bite out of that particular trade, but why it's also transitioned. So the dollar continues to be in a chop. So down near that 79,365 area, I was watching for support. We got the support. The Fed triggered that support. That was what yesterday's video was about, and how I capitalized on that with some call options. So we got up to this 80.50 area, and now at 80.50, I'm looking for exhaustion. And we had basically a quick little inside candle, and then boom, here is the sell-off. Now, the speed of the sell-off was not anticipated. I think a lot of people could say, hey, look, we're looking for exhaustion and a reversal, but the scope of the reversal, I think that was fairly unanticipated. But it's interesting that we went all the way to 79.90 and exhausted at the 80 area. So we're sitting right on a line in the sand at the 80 major psych level. So ultimately, what traders are saying is we didn't like 80.50, it was overbought. We didn't like 79.90, that's too low, and now we're just hovering around the 80 level. When I mean hovering, we are just moving sideways along this level, have been for some time now. So we pretty much know now the traders are waiting on something. You know, what's next? What's going to move this market? Well, the first mover is going to be by way of the euro. Now remember, the euro and the US dollar have that inverse, very tight, but inverse correlation. So depending upon what this German IFO business climate number is at 5 a.m. Eastern Standard Time tomorrow, we could see an initial euro-driven reaction in the dollar. A good number in the German IFO is going to send the dollar lower, likely through 80. A bad number in the German IFO is likely going to send the dollar higher off 80. And then we get into more dollar-driven data by way of the CV consumer confidence and the new home sales. So the market is going to likely trigger off those two scheduled economic releases, and then based on that, we'll get an idea of what's going to happen with the euro. So I still am long the euro US dollar on the daily time frame, and what's nice is I have a cushion now, not as nice a cushion as when the market was trading up towards 38.80. Again, we actually found exhaustion before the 38.80 minor cycle level, and right now we're finding support well above the 138 handle, but I'd like to see this market back above the 38.45 level, which was not only an optional exit, but also a resistance level. I'd like to see the market back above that 38.50, 38.45 area. But again, if my dollar's hovering around that 80 area, 80.07 to be precise, then you can see here the equivalent is around the 38.35 area on the euro. And again, the same reason that I'm looking for the dollar to move is definitely a reason that I'm going to be looking for the euro to move in that German IFO. So obviously I need a good number here to help propel the euro higher against the dollar. And it will be a move that fires on both cylinders in that strong Europe data should strengthen the euro, simultaneously weakening the US dollar. The last market for today is going to be gold, and I took a small taste of gold at 13.35, but the bulk of my position that we've been setting up in the chat room is in this area, the sweet spot, between 13.20 and 13.03. Now this is actually a trade that you can take right now. There's a number of reasons I think this fade, no longer a swing buy, but this fade works. Above the 200 period simple moving average, above the 1300 level, the 50s crossing over the 200, so we have technical reasons to expect more momentum and support, and we have a price-based reason to expect 1320 to 1300 to support. Now obviously 1320 is in the dust, and the bulk of my position I'd like to trigger around 1305, so I'm being patient, but I've got a long position here already with expectations to go revisit the 1380 area. I'm not looking for the market to head up back to 90, actually 92, but 1380. So it's a fairly wide area, but I think the gold bugs are going to find 1300 a whole lot more appealing a place to buy than just shy of 1400. So that's today's free video. Those are some of the setups that I am looking for follow through on and am taking right now. The premium video, we are going to be talking about the British pound as we go into the first of 3 major hot zones this week, starting with tomorrow's CPI. We're going to determine whether or not we continue to like the pound as a strength story. It's going to need some data to get that next leg up. So we're going to take a look at the pound. I'm going to show you some levels on the Euro US that I'm watching closely, as well as follow up on the Kiwi US distribution fade. And a lot of you have been asking me about that Aussie Loonie 240 minute. We'll talk about some of the levels in terms of proximity as we go into tomorrow. But really, that Aussie does have the 1245 Deputy Governor Lowe speaking, but really the hot zone everyone's waiting on, and we will set this up tomorrow, is the Aussie going into Governor Stevens tomorrow. All right, I'll see you in the premium video.